Do you want to know more about 3 of my high performance dividend stocks? Then stay tuned. And with that, welcome back to Investing for Generations, your channel for high quality stock research for long-term value investors. And as you maybe already know, I like my stocks boring and of course good performing so that I can take a good night sleep. And even better, if they pay a nice dividend. And so I want to talk about today about 3 of my high performing dividend stocks in my portfolio. And number 1 is Chevron, the oil giant. Chevron right now is trading at a little bit over $80 with a dividend of 6.53%, a very high dividend of 6.53%, but also a very safe dividend. In my deeper analysis of Chevron, which you find the link here up on the screen, I explained why I think this dividend is very safe and why I think Chevron is a good long-term investment. The 1-year target of the analysts is around $100, and I bought my shares in the depth of the March crash in mid-March and then another chunk in May, and so I'm up already 36%. This performance includes also the paid dividends. The intrinsic value, which is here the red line on the chart, for me is around $100. So right now we are way under the intrinsic value, and for me, if Chevron dips under $75 to $70, something around that, I will add more of this great company because I think you can make a good return in the long term with this investment, at least if you get it for a reasonable price. And that's of course the goal with every investment. Of course, Chevron highly depends on the oil price, which is very volatile and right now at a very low base. And so over the long run, also the oil price will come back and with it Chevron. And so I think I found a very good entry point here for a really long-term investment with a good return. My second high performing dividend stock is Caterpillar. I'm very sure everybody of you know this great company. And Caterpillar right now is trading at $154 with a PE ratio or price earnings ratio of 20.6, which looks not so overvalued, and a dividend yield of 2.77%. Also a good dividend payer. And I was able to buy into Caterpillar at the end of May for a little bit over $112, and so I'm up 37% already. And as you can see, as I said, the red line is the intrinsic value, or at least my calculated intrinsic value, a little bit under $140, and so Caterpillar right now traded a little bit over the intrinsic value. So there is no reason for me to add at this point, but also no reason to sell because I think Caterpillar will be also a great long-term investment, at least with this very great entry point. And of course, with all the money going into infrastructure right now and all the infrastructure programs in America, but also in Europe, I think Caterpillar will have his share in this. And so I'm very sure this company will make money and will make a lot of money even in the foreseeing future. And so I'm very happy I'm shareholder of Caterpillar with this great entry point in May. And my best performing dividend stock right now is the not so well known, I think, Leggett&Platt. They are into bed furniture. Also, they are a deliverer for the automotive industry. So check also here out my video and my deeper analysis about Leggett&Platt, and you will learn a lot more about this great company. And with Leggett&Platt, the current price is at $42.88, with a price earnings ratio of 25 and a dividend yield of 3.76%. So also very good and very stable dividend payer. And Leggett&Platt, I was able to buy in May and another shares in June. And so I'm up already 55%. This includes the dividends too. This is really so far a very, very good investment in a very boring and but stable business. Calculated intrinsic value, or at least my calculated intrinsic value, is around $43. So right now we are trading almost on the intrinsic value. And so, as I said, as with Caterpillar before, in this moment there's no reason to add more, but also of course no reason to sell anything of that. And so also Leggett&Platt will be a long-term investment for me, and maybe all of these three companies, at least when I look at it right now, is something I bought and in the foreseeing future I will not sell, and hopefully I can hold it almost forever. So with these examples of my current portfolio, or out of my current portfolio, what's the conclusion of that? All of these three companies are big players, boring businesses, nothing spectacular. And the conclusion for me is I don't need the hot stocks. I don't have to go into the high overvalued tech stocks like Tesla or Apple or the EV stocks, which even not make money when you look at Nikola or Workhorse or whatever hot stock is just right now there on the market. There is no reason to go into this with this high risk. Of course, high reward if you're right, but also with a high risk on the other side. No reason to make a good return to gamble like that. And so I stick with my boring big players and just have to have the patience to wait until you get them for a reasonable price. And with this said, just do the weekly insight of my current portfolio. And as you can see, even after the correction of the last 3 or 4 days, it looks still very, very green. And as you can see here, and you can find Leggett&Platt, Caterpillar, Chevron, but also big player like Coca-Cola with a very good performance so far. Walt Disney, the only really high speculative stock is Air Canada for sure, but even Air Canada right now is in the green. And I also made a deeper video about Air Canada, like of all of my stocks in my portfolio, and you can find all of these videos in the playlist on my channel. And there I explained why I think Air Canada is the only airline I want to own right now in this really difficult times for the travel industry and the airlines. And last but not least, take a look at the performance of my portfolio compared to the S&P 500. As you maybe already know, I started my portfolio at the 2nd of December 2019, and since then my portfolio has a performance of over 24%, which is almost 15% better than the S&P 500. And this is really a nice outperformance, and even more if you think about that there are not the hot tech stocks into it, or even not much of it in my portfolio. And so I'm very happy with this outperformance so far. So that's it for today. If you liked the video, give me a big thumbs up, subscribe to my channel and ring the notification bell to never miss another video. And then we will see on the weekend with another analysis of another stock out of my watch list. See you then. Take care. Bye bye.